Want to own real estate but don't want to use all of your money every single time? Well, the BRRRR method might be for you. In today's video, I'll be breaking down how the BRRRR method is the most effective strategy for those starting out in real estate who want to get the best returns, who want to build wealth for their families, and want to get the biggest tax savings. Now, you're probably wondering who I am. My name is David A. Bettis. I'm a tax strategist who's helped over 50,000 taxpayers file their returns and save millions of dollars in taxes leveraging tax strategies just like the one I'm going to share with you here today. If you like tax strategies like this and you want to invest in real estate, stay tuned. Let's go. So what is the BRRRR strategy? Let's run through this really quickly. So it is buy real estate, renovate, rehab real estate, rent real estate, refinance real estate, and repeat that process till you die. Now, when buying real estate, you should always use a formula. You should have a framework to make the purchase. And the one that I use is the 80% rule. And what we do is when I look at a property, I'm going to Zillow or Realtor.com. I'm finding the property address on that website and I'm looking for the value. You know, Zillow calls it the Zestimate and Realtor.com says estimate of value. And what I'm looking at is that value because that's going to indicate what the property would sell for at the best condition, which is the after repair cost. Now, obviously, we're looking for distressed or devalued property, so that means that they're not in the pristine shape. That means they are needing repairs. So what I do is I take that number, whatever it is, let's say it's 100,000, and I multiply it times 80%. That gives me the $80,000 that I could pay for this property. Now, the challenge is I would only pay 80% if it was in the after repair value, which it's not. So I subtract from that 80% the repair cost that I estimate. And let's say it takes $50,000 to repair it. That means I can only offer $30,000 for this property. Most wholesalers understand that they're going to be selling it to an investor like you. And so they're already going to have these costs factored in. They're going to say it needs this much in repair. Here's what I'd recommend you purchase it at. And that's the coolest thing because wholesalers are incentivized to help you because if they do, you'll buy more properties from them. So this is the formula that I use in the secret sauce to really get the best out of this BRRRR method. Let's talk about rehab. Now, rehabbing is probably the hardest part for most of us because if you've never been in real estate or construction, you probably don't know what things are really worth. So what I recommend is determining the value of repairs by either contacting a local contractor to give you an estimate or working with somebody to help you determine these costs. Now, renting a property is so important, especially to the right tenant at the right price. Now, in order to determine what you should be renting at, I would call around to local property management companies and I would ask questions like, what is a property in this area rent for? And then I would say, this is where we should be renting at. Now, most properties, again, will rent very quickly if you price them right, so renting is important. Now, if you're going to refinance this at the end of this process, you're going to want to know how much interest rates are at the time as well as how much you want to refinance, and that will give you a monthly mortgage payment. You can calculate that with a simple mortgage calculator. And you'll say, let's say the mortgage payment is going to be $1,500 a month. Well, now you have to determine how can I get $1,500 a month for this rental property? And hopefully that $1,500 includes real estate taxes and insurance. All right, now we've rented the property. What's next? We definitely want to refinance it. Now, going to a bank and refinancing properties isn't that easy, but it gets easier when you have a tenant. That's why we want to rent the property first before we go refinance because a bank is going to look at the debt service and they're going to consider your income. And so if your income doesn't justify the payment, they're going to say, wait a minute, you can't afford to pay this payment and your mortgage and your car and your credit cards. And you're going to say, wait. Doesn't matter. Look, I have a contract from somebody who's already going to rent this for the next year and they're actually paying me. I don't need to pay this bill. They will. And that's where the refinance becomes a blessing because it's like, wow, somebody else is going to service the debt. Now what you do is that bank will lend you money to refinance all your cash out of the property. And now you can take that money and go buy another property. One of the biggest challenges that you're going to face is coming up with the cash in the beginning. But here's what I'd recommend. This is a pro tip. You can either use your savings, borrow against a retirement account, or the worst case scenario is use hard money. These are all ways to borrow money up front so that you can then go out and buy a distressed property, renovate that property, rent the property, then take it for refinance, pay yourself back on that loan, and take this property's accumulated earnings, which is the profits, and do the next deal. If you do this enough time, you'll have your own bank, meaning your own money, and you can buy as many properties as you can with that money, and you continue to repeat the cycle forever and ever until you die. Because as of today, there is a $13 million capital gains exclusion on estates transferred to kin, meaning under $13 million, you can transfer all your real estate to your family at death and there are no taxes. So imagine that. So just continue to add property after property and make sure you transition them at death to your children so you can get a tax-free exit and you get to keep these properties with the cash flow along the way. Now, this was the BRRRR method, and this is a strategy that I personally have used many times, and I think you should if you want to build wealth for you and your family. And if you love content just like this, please click on the subscribe button. And if you've ever done a BRRRR before, comment below. Let me know how it went. Was it positive, negative? How much money did you make? I'd love to know. Share it with me down below. Looking forward to see you on the next video.